Bill Gates is the world's fourth richest person, trailing only Jeff Bezos, Elon Musk, and Bernard Arnault. His net worth of $104.6 billion is a massive amount of money. According to a recent 13F filing, the Bill and Melinda Gates Foundation has a massive investment portfolio worth more than $19 billion. The vast majority of us can only dream of having such wealth. There is one similarity between the average investor and the world's wealthiest person. We're all looking for good stocks to buy and hold over time. That is why it is worthwhile to examine the Bill and Melinda Gates Foundation stock holdings. Let's list out the 5 best stocks we should look out for this year. Number 1. Berkshire Hathaway. Berkshire Hathaway stock is arguably the Gates Foundation's most valuable individual holding, and it's easy to see why. It's safe to say the funds are in safe hands. Berkshire Hathaway grew from a struggling textile manufacturer to one of the world's largest conglomerates under Warren Buffett's leadership. Berkshire Hathaway is now a global behemoth. It owns and operates dozens of companies in nearly every major industry, including insurance, railroads, energy, finance, manufacturing, and retailing. Its market capitalization exceeds $600 billion. Buffett typically evaluates the company's performance in terms of book value in Berkshire's annual letters to shareholders. Book value is a financial metric that compares a company's assets to its liabilities. The resulting difference is the book value of a company. This is a proxy for a company's intrinsic value, which Buffett considers to be the most important financial metric. Berkshire Hathaway does not pay a dividend to its shareholders. Buffett and his partner Charlie Munger have always claimed that they can generate wealth at a faster rate than dividends can. Number 2. Waste Management. Waste Management exemplifies a company with a broad economic moat, a term popularized by Warren Buffett to describe a strong competitive advantage that shields a company from the full wrath of market competition. Waste Management provides waste collection and recycling services. Only a few companies control the majority of the market in this highly concentrated industry. Waste Management released Q1 2022 results for the period ending March 31st, 2022. On April 26, 2022, the company generated $4.66 billion in revenue for the quarter, a 13.4% increase over Q1 2021. Adjusted net income was $540 million, or $1.29 per share, up from $450 million, or $1.06 per share, in the first quarter of 2021. Total company volumes increased 3.6% in Q1 compared to the same period of the previous year. Waste Management repurchased $250 million in common stock during the first quarter. In addition, the company paid out $525 million in cash dividends to shareholders. Waste Management updated its forecast for 2022. The company anticipates 5.8 to 6.2% revenue growth and $5.325 billion to $5.425 billion in adjusted operating earnings before interest, taxes, depreciation, and amortization of EBITDA. Number 3. Canadian National Railway. The Canadian National Railway is North America's only transcontinental railroad. It connects 3 coasts, the Atlantic, the Pacific, and the Gulf of Mexico via a network of approximately 20,000 route miles. It transports over 300 million tons of cargo and handles over $200 billion in goods each year. Canadian National Railway increased its dividend by 19.8% for the March 31st, 2022 payment date on January 25th, 2022. Canadian National Railway announced first quarter results for the period ending March 31st, 2022 on April 26, 2022. Revenue increased 1.5% to $2.89 billion, exceeding expectations by $9.1 million. Adjusted earnings per share were $1.03, up from $0.99 the previous year, but $0.06 lower than expected. Number 4. Caterpillar. Caterpillar is the world's largest manufacturer of heavy machinery. It has a strong brand and a dominant position in the industry. Caterpillar manufactures and sells heavy machinery primarily to the construction and mining industries. Construction industries, resource industries, and energy and transportation are the company's 3 primary segments, with its financial products segment providing ancillary financing and related services. Higher revenue was primarily driven by increased sales volume, which was supported by increased end-user demand for equipment and services. Furthermore, dealers increased inventories more than in the first quarter of 2021, positively impacting the company's bottom line. Profitability was also boosted by favorable price realization. Number 5. Ecolab. Ecolab was founded in 1923 by Merritt J. Osborne, who invented a new cleaning product called Absorbit. This product cleaned carpets without requiring businesses to shut down for carpet cleaning. Osborne founded the Economics Laboratory, or Ecolab, a company centered on the product. Ecolab is now the industry leader with annual sales of around $13 billion. Ecolab has three major business segments, each roughly equal in size: global industrial, global institutional, and global energy. In terms of operating segments and geography, the company is diverse.